Hello investors, today I will give you a list of my top 10 dividend stocks for this year. Of course, this year it's very hard year for the stock market for the investors. We remember S&P 500 last year showed the performance of decreasement in 20%. That's why I'm now prefer to buy dividend stocks to receive stable cash flow every quarter, sometimes every month. But now I prefer to receive a stable income. So that's why I today decided to make especially for you a video with my top 10 dividend US stocks to invest now to receive a nice dividend yields. Today most of the companies will be either aristocrats or kings, dividend kings. So what is the difference between dividends aristocrat and dividend kings? So look, we can see that the dividend kings have a record of at least 50 years of consistent dividend increases, while the dividend aristocrats have at least 25 years of consistent dividend increases. So today, of course, we will speak about dividend kings, dividend aristocrats, very huge companies with a very large dividend history. So let's start with the first company for today. It's AbbVie with the ticker ABBV. Its price now is 156 and the dividend yield is 3.8. So if we look at the chart, we can see that we traded at a decreasing channel. Now we traded in the lower border of this channel, and here of course we may see this stock a little bit higher. Let's have a look on the dividend history. So we see the dividend increase track record is 51%. So AbbVie is a dividend king. The annualized 3-year dividend growth is more than 9%. So very impressive and very stable dividend paying company. And let's have a look on the fundamental parameters of AbbVie. We see market cap 176 billion bucks. The revenue of this company is growing in a very fast rate. In 2018 it was the revenue early the 32 billion bucks, but now for the last year it's more than 58 billion bucks, so very impressive. And of course the net profit margin more than 20%, so it's quite impressive and high marginal company. And of course dividend yield around it's very close to 4%. So for me AbbVie is one of the top buying for now. Let's move to the next company. We see that Johnson & Johnson with the ticker J&J, its dividend yield is very close to 3%. And also if I look at the chart, it's traded in a increasing channel. Now we are trading at the lower border of this channel, and by the way the momentum there RSI indicator is now 31. On the weekly basis it's telling us that this stock already oversold. So maybe if you're a dividend hunter, dividend investor, it can be very nice time to buy this stock. Let's have a look on J&J dividend history. We see also it's the second dividend king for today, so the 61 years of consistent dividend increasing, and of course the 3-year dividend growth is about 6%, so very impressive dividend history of this company. If we look at fundamental parameters, so market cap about 400 billion bucks, the dividend yield is about 3%, and look, it's very stable business. The revenue is grow very slightly, and then last data for the last year is the revenue was 95 billion bucks, and the net profit margin is around 18. So the marginality is very impressive. Dividend is all right, and of course it's a dividend king, so any I guess any problems, any issues for me, why not to invest in the stock. And also if we look the RSI momentum indicator, last time we were so low, it was the coronavirus crisis. It was about 2 years ago, so now it can be a very nice time to invest in this stock. The next stock for today is WBA. It's a drugstore chain company. It's a healthcare company. Look, now it's traded at the levels of around 36 bucks. If we look at the chart, in my mind here just range between 80 bucks to 36. So also you can see here in the impulse correctional impulse. So the first wave, the second, the third, the fourth, and the fifth. Usually, by the way, the third is the largest wave in the impulse. So here it looks very organic. And if we will look closely to this one, to this third wave, it also can be reflected to 5 waves: the first, the second, the third, the fourth, and the fifth. So these projections, the probability of it correction, it can be very high. So WBA, look, it's 47 years of dividend increasing. It's a dividend aristocrat. The dividend yield is very impressive, with more than 5%, and the 3-year dividend growth is also more than 2%. So of course it's a very stable and highly yield dividend paying company. And of course the dividend history, for me it's very impressive. And if we look at the chart, we now can buy this company, this stock, at the levels of 2012. So why not to risk? Maybe why not to start to invest in the companies and just to receive 5.3 dividend yield annually. You also may write down in the comments which of these companies do you hold in your portfolio. Do you like to receive dividends? What is your favorite dividend paying company? So don't forget to leave your comment down to this video. The next stock for today, it's McDonald's with the ticker MCD. I think at least all of you once in your life visit its restaurant, its places, I guess. Dividend yield where it's above 2%. Let's check it, the dividend history. So 46 years of dividend increasing. So now it's dividend aristocrat. So but it's in 4 years it will be most probably a dividend king. So very high probability to become a dividend king for McDonald's company. The dividend yield is 2.2%, and the 3-year dividend growth is more than 6%. So of course McDonald's, it can be a top buying and a very highly ranked company for dividend investors. Let's have a look for the next company for today. It's Coca-Cola. Of course it's a consumer non-durable company who uses Coca-Cola products, the beverage. So the dividend yield is more than 3%. Coca-Cola company has a very rich dividend paying history of a consecutive 62 years of dividend increasing. The dividend yield now is 3%, and the 3-year growth rate of dividends is more than 3%. So for me, Coca-Cola is a top buying. It's already a dividend king. So all the dividend investors, include Warren Buffett, likes very much the Coca-Cola company. The next dividend stock for today is Pfizer. So look, Pfizer now is dividend yield 4%. If we look at the chart, I guess let's look at this period. So I guess here it is a correction. It's impulse. So here it went maybe the first wave, the second, the third, the fourth, and the fifth. So I'm expecting another move up in the fifth wave. By the way, here it's a major support level at 37. So I'm expecting to see the bounce from this level. And the RSI, the momentum indicator, now is 31. So telling us that the stock already oversold. So why not to buy this stock? Let's have a look and the fundamental parameters, we see that the marginality increasing last years, and also the dividend, the payout ratio is only 30%, telling us that only 30% from its net income the company pays as a dividend to its shareholders. So it means, of course, that there is a huge potential for Pfizer even to increase its dividend payments. The next stock for today is Philip Morris. It's a tobacco company. Of course, it holds a lot of tobacco brands, the ICAs. Its dividend yield more than 5%, market cap 153. So I personally hold this company in my portfolio. If we look at the chart here, I think it was an impulse. The first wave, the second, the third, the fourth, and the fifth. Then we had a correction, ABC move, and now I'm expecting to see start a new impulse. By the way, usually with the correction finishing at around the fourth wave of the previous impulse. So here I'm expecting, of course, this stock to grow. 5% dividend yield, for me it's very impressive, quite nice. And by the way, if you look at this chart, now it's traded $100. It just let me check. So it just 10% higher than the pre-corona period time. But look, for this, how many times it paid the dividend? I guess more than. Look, it was 2 years, so it about 8-9 times the company paid nice and juicy dividends. If it was the dividend yield 5%, so 10% here and 10% here. So generally speaking, your capital appreciation here may be 20%. Just summary: the dividend yield, and of course the stock performance. So for me, Philip Morris is a very nice stock to hold, to buy. And by the way, the net marginality is 29%, so it's a very high marginal company. The next stock for today is AT&T. It's another company that I'm hold is my portfolio here. By the way, historically, I think that we had an impulse. The first wave, the second, the third. Now is it's a correction. ABC, and ABC, many correctional waves. But then I'm expecting to see that we may see a fifth wave, and in this case, its stock price may be higher than $40. I remind you that AT&T is a communication service company, but its dividend yield is around 6%, market cap 134, so very impressive dividend payment company. So I think now it's very cheap. Also their side, the momentum indicator telling us that it may be oversold now, so I am just continue to buy, to hold, and to receive 6% of dividend yield every year. The next stock is Verizon. By the way, it's the same sector, the same industry as AT&T. They are a competitors, by the way. So Verizon has a very nice dividend yield. Where is the dividend yield? About 7%, market cap 160. So very high margin, very high dividend yield paying company. If we look at the chart, so generally it's a range between $38 to 60. Now it traded at the lower border of this range, so I'm expecting, of course, to see the stock a little bit higher. But anyway, any case, I received 7% dividend yield. If we look at the for example, quarterly, at its performance, the revenue is very stable. The marginality last quarter even increased. Look, 1 year ago it was 13% the net profit margin. Now it's more than 18. So very good performance of the company, of its financial financial parameters, and also it's a cheap stock. If I'm not mistaken, look, the PS ratio, price per share, is only 1.1. It's the cheapest figure since 2016. So why not to buy VZ? Not VZ is the ticker, but Verizon is the name of this company. I remind you, dividend yield is around 7%. So this company, of course, I hold in my personal dividend portfolio. And the last stock for today, it's Altria Group with the ticker MO. The dividend yield is more than 8%. Oh my gosh, really 8%, it's a lot. If you look at the chart, I guess that here it was the wave, the first wave, the second, the third, the fourth, and the fifth. Here it's the correction already finished, or the near, very close to the finishing of this correction, but then expecting to see the wave, the fifth wave, and in this case we may see the stock higher than 65 bucks. So then there is a potential to grow more than 60%. Let's have a look on its fundamental parameters of Altria, because the dividend yield is really very impressive. The PS, price per share, is now it's very low, only 4. It was 6, 7, so now it became better. And its fundamental parameters, let me on the quarterly basis, let me look. So last 5 quarters we can see that it's stable, profitable company. It doesn't showed any quarter its quarter performance, it wasn't loss, and the revenue is very stable. Last 5 quarters it's higher than 5 billion bucks. And the last data, I guess here is some tricky, some fishy, but generally speaking, if you look annually, so the last years, the around 15, the net profit margin. So anyway, I am thinking it's okay. Generally speaking, it's okay. So Altria, I remind you, market cap 83 billion bucks, dividend yield more than 8%, and of course here the huge price, a huge potential to grow, to bounce from this level. I hold this stock in my portfolio, but anyway, of course, there is like in any other stock in the equity market, there is a risk, but to receive such nice dividend yield, I think it very nice and very convenient. So generally speaking, it was my list of top 10 dividend companies for now. If you like this video, of course, press the like button, don't forget to subscribe to my channel, and see you on the next time. Bye.